Good afternoon, everyone. Thank you for joining us for another episode of the Blockchain Advisor, where we explore every parts of investing, commodities, ETFs, cryptocurrency, and also having great conversations with the founders of what I would call the modern derivatives trading world. The traditional finance started with, in my opinion, with the Black-Scholes model. Before that, it was really not all that much to do, fundamental analysis. But the Black-Scholes model really brought something to us, and hence the beginning of the Chicago Board Options Exchange. And with us today is Barry Kitt. Barry reached out to me. I reached out to him in a Facebook group dedicated to CBOE members. And so I'll have to honestly say I don't remember Barry from the trading floor, but that's what's going to make this one of the best episodes, so that we can talk about it, get reacquainted, but getting acquainted. And Barry, thank you for joining us.
Thank you for having me. It's a lot of fun.
So Barry, before I clicked record, Barry showed me his trading badge and original trading certification from the CBOE.
When my first options jacket.
I love that.
I've not worn in 37 years. And then I've got let's see if I can make it so this can be seen. Let's see, my trading badge and my CBOE license, or whatever you want to call it.
I love the old engraved, like the etched letter acronym.
Yes. Yeah, that was the old time, boy, I'll tell you. So that was fun. And then once upon a time, we'll get into it later, when I bought a place out in Lake Tahoe, I had my car with my Nevada plate CBOE. Notice the date 7 of 85.
Yes, I love it. I love it. So Barry, again, thanks for joining us today. Tell me, give me the whole story. Like, where did you grow up? What were some of your interests? Were you a finance major? What brought you to the CBOE? Because I've heard 101 different stories. Everybody has a slightly different story. So share with us a little bit about your background, where you grew up.
Okay. So I grew up in Sacramento, California. And my mom died when I was 10. And my dad lived in Chicago. And here I was in Sacramento. I didn't know much about my dad, but I knew he was into this thing called the stock market. And so whenever he would come visit, he would always read his Wall Street Journal in his red leather chair. And so at some point, I think I started reading that Wall Street Journal occasionally, maybe thinking that he'd take more of an interest in me. So that was kind of the beginning. So I went to Cal State Sacramento, or Sac State as it's affectionately called. And I would go to E.F. Hutton, which is right next door to Sac State, every day. I'd go before class, in between classes, after class, whenever I could fit it in my schedule. And I'd sit there with the old timers and watch the Translux ticker tape go across. We talk about stocks, and they'd always have a stock tip. And I'd go back to the library section of E.F. Hutton and look for the value line pages or the Standard & Poor's sheets, whatever. And since I didn't have any money, the CBOE opened in 1973, as you know. And so there I was going to college 75 to 78. And so whenever I could scrape together a few dollars, I'd buy a call option. And so that was my first experience trading options. I usually lost money, but at some point I was up, but I didn't know how or when to sell, sort of thing. So when I was graduating, the office manager of E.F. Hutton offered me a job as a stockbroker. I thought, boy, that's a great idea. And I was a finance major at Sac State. So I said to him, this was June of 78. I said to him, I would love to take that job, but what if I went back to Chicago for the summer of 78, tried to get a job in the CBOE, learned as much as I can about stock options over the summer, and then come back in the fall, kind of be the options specialist in the office, because none of the stockbrokers are paying attention to options.
That's an awesome idea.
So he said, that's a great idea. So I went back to Chicago, got a job, and I'm sad to say I can't remember if A.G. Becker came first or Lake Options came first, but I worked for one or the other. There was the manager on the floor, his name is Bill Murphy. And so I did that for 30 days. And I discovered that was pretty much the lowest form of life, being a runner on the CBOE. The telephone clerk would rip it off the teletype machine, or he'd take it on the phone, he'd hand it to you, say, get in IBM and get a quote on this on the way out. And you go to IBM and there's 300 people standing there yelling and screaming. And you're, of course, the floor broker you have to get to is the middle of the crowd.
Of course.
So you're trying to get in the middle of the crowd, everybody's shoving you, and it's hot and it's sweaty back in those days. And you get to the floor broker and he's busy. He doesn't want to give you a quote on the market on the way in. But so anyways, so I did that for 30 days. And I decided that since I had a very limited experience trading options and I loved the stock market, I decided that I was going to try and be a market maker. So I borrowed $50,000 from my father, who I was getting to know, who happened to live in Chicago. And I took a test. I leased a seat for $1,000 a month, went down on the trading floor and I started trading. And I went into the Boeing pit. And the 747s were out, and it was a good story, a good fundamental background there. And so I went into Boeing, and the market hadn't opened. It was early. I was going to get down there, and I was really going to go get them. And so I stood in one spot, kind of waiting for people to filter in. And some guy came up to me and kind of nose to nose, and he goes, "What are you doing?" I said, I'm sorry, I don't understand. He says, "Why are you standing there?" I said, "Well, I'm going to trade in Boeing." He goes, "You're not going to stand there and trade in Boeing. That's where I stand." So I'm, "Oh, excuse me." So anyways, I wanted being in the back of the pit, as far away from the book as you can get, just about. And so the market opened and people were buying and selling, and I felt like I needed to do something. And in the first week, I lost 80% of my money. And I decided that wasn't very much
a lot
fun.
of money.
That wasn't very much fun. And so I decided to start paper trading, saying, okay, well, if I was going to do something, what would I do? I'd buy this or I'd sell that. And eventually I started having a lot more winners than losers in my paper trading effort. And of course, back in those days, so then I started trading with my remaining capital, and I was down there for 7.5 years and had a very successful career down there. But it was interesting because when I first started down there, spreads were very wide. It wasn't unusual at all to have an option be 4 to 4.5. And so for a broker would come in, say, Boeing 140 calls, and you say 4 to 1/2, you go buy them. Next time somebody comes in, he's 4 to 4.5, sell them. You just made $0.50. It was awesome. And so you could literally make money on the spreads in those days. And then as time went on, I would say it was around 1980 or so, spreads just went 4 to 1/8. And trying to make money off trading spreads wasn't very good. But that took me back to my E.F. Hutton days, where I would sit there and talk with the old timers and learn fundamental stories. And so I decided that pretty much you needed to have a fundamental opinion in a stock that you were going to trade in to do well. So I found myself one of the original boat people, as we were affectionately called.
Yep.
Wherever there was action and I had a fundamental opinion, I was going to these various stocks and trading in those stocks. And so anyways, that was pretty much fun. Well, so in 1980, so I went down there in 78. In 1980, I decided I was pretty lonely. And so I brought 3 of my friends from Sacramento back to Chicago, got them a job as a runner on the floor. And so the first one I brought back was, his name is Scott Connor, and Scott's acronym is SWC. And Scott came down there in 1980.
I know that guy. I know that name. I know that acronym. I just got to remember what he looked like, but go ahead.
So he was down there from 1980 to 2007. And Scott today is Director of Trader Education for Thinkorswim.
Oh, sure. Okay. Scott Connor. Got it. I know exactly what you're talking about.
He does the morning telecast on their online network.
Of course.
And so Scott was a tennis instructor at Club Med when I first mentioned the idea of coming to Chicago and working on the floor. So he came to Chicago and he's still there.
That's great.
And then the next friend I brought back was PJ Forney, whose acronym is PAC, P-A-C, and he was down there from 81 to 2003.
Pac-Man?
Pac-Man.
You brought Pac-Man down.
I brought
Awesome.
Pac-Man down. And I'm gonna try and share a screen with you right now. All right, I'm gonna try this.
I want to interview him. Is he still around?
Yeah. Okay, host disabled participant screen sharing. Can you allow
sure.
that?
Sure. Just give me a second. Go ahead.
Okay. All right. Now share. Now, can you see somebody in a Shaq and green jacket?
Yep.
Okay, I'm going to play about 40 seconds of this, and I'm going to pause it.
of X number of bushels, say one contract, 5,000 bushels of soybeans in storage in an elevator.
The trading is done using a system known as open outcry, a type of free-form auction. In a crowded pit, it can get a little confusing. How do they know who they're trading with?
You make eye contact with the person on the opposite side of the trade.
On busy days where there's a din of noise in the pit, in order to make sure that you're trading with the same person, you do one of two things. If he's close enough to you, there's no problem. But if the off...
Okay, stop right there. That's Pac-Man right there with his hands outstretched. So
yeah, I stood on the other side of that, but I see Shelley Brown, Tom McGuire, Tom Brady, sometimes Matt Flipovich. I sometimes I need a second to remember these guys, but yes, yeah.
So anyways, that was
3 days.
That was Pac-Man. Now let me stop the share. Let's see. Am I back now?
You're good.
Okay, cool. That worked. So anyways, PJ was down there, like I say, for 22 years. And then I hired him to come work with me at the Pinnacle Fund. And he was with me for 18 years until he retired 3 months ago.
Wow.
So, and we've been friends since the 5th grade.
That's terrific. I would please connect us. I want to chat with him.
I will connect you. Absolutely. I talked to him yesterday. I would talk to him frequently and told him I was doing this and I was going to show this video. And the third friend was Kevin Werner. His acronym was VON, V-O-N, and he was there from 81 to 97. Mm-hmm. So and I've been friends with Kevin since 2nd grade.
All good guys.
All 3 of these guys, grew up in Sacramento. Everybody, at some point you graduate, you're like, what am I going to do now? And here was this great opportunity to come to the CBOE, which worked out wonderful for all 3 of them.
So Barry, when you were talking about how important it was that you learned fundamental analysis, how that made you a successful trader. I mean, you didn't need to know fundamental, you didn't have to have a fundamental opinion to scalp. You must have been at that time already establishing positions, covered call writing or maybe some kind of strategy in order for you to have the belief and the confidence that this was going to work out. Because even good companies that are fundamentally sound will go down in the bear market crash of 87 or in a recession.
Yeah, fortunately, I left the floor in 85, but yeah, that would have been bad. It was bad for me, actually, but not on the floor. Mm-hmm. So yeah, I always had a fundamental opinion on a stock that I was going into. I would read the Wall Street Journal, Investors Business Daily, whatever, from page to page every morning before the market opened. And so I always had fundamental opinions on stocks, and that served me well as I moved on to my later stage in life when I opened 2 hedge funds. Mm-hmm. So I think one of the things you asked me that you wanted to know was my best trade ever.
If you'd like to share that, I would love to know what that was.
Okay. Well, first of all, before I get to that, the prelude to one of the 2 best trades I'm going to give you was I went into Homestake mining. But I was in Kennecott copper for quite a while because the metals were hot, 79, early 80. And then Homestake Mining, which was the world's largest gold mining company at the time, which was bought by American Bear many years later. So I kind of got caught in Homestake Mining. It was just going up like crazy. And so I was short a bunch of calls in Kennecott copper. And on March 11th, which was a Wednesday of 1981, I had the 25-30 call spread at some point in Kennecott, and I sold my 25 calls because the stock was 27, and in 7 more trading days on Friday, March 20th, the 30s were going to go out worthless, in my opinion. The stock was 27. So I sold my 25s, went to Homestake Mining, and for whatever reason, a divine intervention, I went back into Kennecott copper and bought back the 500 March 30 calls that I was short. On 2 days after I bought them back, on Friday, March 13th, Superior Oil bought Kennecott copper. Last trade was 27. They bought them for $62 a share.
Oh my gosh.
I would have lost over $1.5 million if I had not bought back those 16ths, those teenies.
Yep, the teenies.
And so that was my first best trade ever. So I owe it to Homestake Mining and a little divine intervention that if I hadn't got caught in Homestake, I probably would have stood in Kennecott and stayed short those 30 calls and
Right.
watched them closely. So that was one. The second one was my mentor at the time worked for a small Chicago brokerage firm named Guilford Securities. And he called me one day and said they had a new analyst. And the new analyst had studied under a guy named Ray Dirks. And Ray Dirks had discovered a insurance fraud called equity funding in the 60s. And so this new analyst at his firm said he thought that there was a fraud going on in Baldwin United. And so August of 1982, I shorted some stock and bought some puts. 2 months later, by October, early October, the stock had gone from 18 to 50, and I'd lost something like $50,000.
Sure.
I'm like, well, that didn't feel very good. Flash forward to December, a couple months later, and he called me up and said, okay, Dan Dorfman, which some of the people listening will remember, he moved markets. The story was he was going to write an article in Forbes magazine, negative on Baldwin United. So I shorted the stock and bought some puts. Article came out, the stock went down, and it wound up being the biggest fraud of all time at that point.
Wow.
And September 26th of 1983, it filed bankruptcy. And I'm going to share a screen again with you. Let me find it here. Let's see, it's this one here. Where is that one? It's this one. Can you see that?
Yep, I can see it just fine.
So that analyst, that young analyst was Jim Chanos. Jim Chanos of the famous short seller today, billionaire short seller of Kennecott Associates. He was a young analyst at that time, and he discovered the Baldwin United fraud.
Wow.
So anyways, I was at the right place at the right time. Am I back with you now?
Yep, you're back.
Okay. I was the right place at the right time, shorted the stock, and I stayed with it the whole time, and made a seven-figure profit, jumped in an airplane, went to Lake Tahoe, Nevada, and bought a home there. I grew up in Sacramento. I was in Boy Scouts. We always went up there camping. I said, man, if I ever get lucky enough to make any money, I'm going to get a place like Tahoe. So hence my license plate, CBOE in Nevada. So that was a great story of Jim Chanos. And thank you, Jim Chanos.
I'm surprised that you didn't have the license plate Chanos. If it,
yeah, well, and CBOE sounded more of. I mean, if I hadn't been on the CBOE, maybe I wouldn't have been lucky enough to be involved with that. But
well, okay. So then you missed one. You dodged the bullet in Kennecott Copper. You made it in the Baldwin United.
Right.
And so, okay, so now here you are. You're above break even. You've had a pretty good 10 years or so, a little bit less than that. And then it comes time for Barry to figure out what he's going to do. Like maybe he doesn't want to go on the trading floor. He's going to do the hedge fund thing, right, more frequently. And that seemed to be way ahead of your time, doing a hedge fund back then. That was pretty admirable that you came up with that. Was it a 2 and 20 model that we currently know of, or?
Yeah, let me give you a couple steps in between.
Sure.
So when I was on the trading floor, I decided that being a young single guy in Chicago, I should open a bar and grill. So, because that's what you do, right? Mm-hmm. So I opened a bar and grill called Gamekeepers on the corner of Lincoln and Armitage with a couple partners. And that was in late 83 or early 84, somewhere around that time frame. And that was a lot of fun. And then I started a telecom company installing privately owned pay telephones when it first became legal to compete with Illinois Bell. Illinois was the second state after Minnesota to allow competition in pay telephones. So I did that, and that was a horrible investment.
Was that the MCIC when they were deregulating the telecommunications industry back then?
I don't recall what the Federal Communications Commission, FCC. I'm not sure exactly how that happened, but they said that they had to allow competition in payphones.
Right, I remember that.
So, anyways, so we installed 2,000 payphones in the Midwest, and it was a bad business. Mm-hmm. So I left the floor in July of '85 to go try and save this horrible investment that I had made. And took me 5 years to turn it around, make it profitable, sold it to a company in Dallas, moved to Dallas to run their sales and marketing. It was an American Stock Exchange company. And I did that for 3 years until they paid me the money they owed me. And then I hated working for someone else and I quit. And I'm like, okay, now I got a wife and 3 little kids in Dallas. Don't want to go back to that cold weather in Chicago. What am I going to do now?
Sure.
Somebody said, well, why don't you start a hedge fund? I said, what's a hedge fund?
Right.
There was about 800 hedge funds at that time. That was in September, October of 93. So anyways, long story short, so I started a hedge fund January 94 called the Pinnacle Fund. And then after that, I opened the Pinnacle China Fund, did that for 17 years. And I had a 24.11% average annual net return, assets just under $1 billion. And
that's really amazing.
And at that point, in 2010, I didn't have any quality of life. I mean, it's just 24/7. So I closed my hedge funds and converted to what's called a family office, which is what I do today.
Mm-hmm.
And my 2 sons work with me. I have 2 sons and a daughter, so we're having fun.
So Barry, I mean, getting assets under management, raising money in a hedge fund must have meant that you did road shows, you did investor dog and pony shows. I don't know what the term is, but did you do that thing? Were you just marketing and hitting up all these trade shows and talking about your strategy, or did it really just kind of grow word of mouth? And maybe you had 1 or 2 big clients that brought in 20 bigger clients.
It was there was no dog and pony shows, no road shows. I started the fund with $2.5 million, of which $1 million was mine. I had one local group that put in $500,000 and sorted here and there. And then it just was word of mouth. I had no institutions. It was all high net worth individuals and just kind of fed on itself. Back in the day, there wasn't a lot of competition. And so people, they graduate from college, they go to work, they make some money, they don't know what to do with it. Mm-hmm. And so I was reflecting on one conversation I had with a doctor. So he called me up and said, hey, I know so-and-so is in your fund. And he says, you've done a good job managing his money. And would you let me put some money in your fund? And so we talked for like an hour or so. And he said, well, can I invest some money in your fund? I said, well, my next opening is July 1st. And he said, can I put $500,000 in? And I said, yes. And so he said, you know what's funny about that? He said, my wife gave me a shopping list the other day. And I went to the grocery store. And on the shopping list, it said Cheerios. So I went down the cereal aisle and I saw Cheerios and they were $3.99 per box. But right next to it was a box of Rice Krispies. And they were on sale for half off, $1.99. He says, I like Rice Krispies too. So I saved $2 and bought the Rice Krispies. He said, but I'm going to give a perfect stranger $500,000 to manage. So, but that's what it was back in those days. People, didn't know what to do with the money, and the competition was small. Like I say, at that point, around 800 hedge funds. So it really just kind of fed on itself.
That's terrific. And can you share, if you want, maybe the basic strategy of the hedge fund, or if that's off the table, that's fine.
Yeah, no, it was a concentrated fund. I was long only, but I always had OEX or later other indices that I would have some kind of hedge on. I'd have some OEX puts, short some calls, what have you. It wasn't meant to hedge my portfolio. It was just meant to make me feel like less of a dumb guy when the market went down and my stocks went down. Concentrated is the only way you can put up numbers like I put up. I would typically have no more than 15 or 20 stocks, even when I got to just under $1 billion in assets. But the key to running a concentrated portfolio is having diversification within your concentration. You can't have one 30% position, then a bunch of 2 and 3% positions. You need to have several that are larger so they can offset each other if one goes down. So then I've always been big in gold and silver, going back to my Homestake days. And just a quick little prelude on that one, because that leads to something I'm doing now, is in Homestake, gold, when I went down there in 78, gold was $280, give or take $10.
I bought my first ounce then.
By March 27th, 1980, the peak, it went up to over $800. So I'm standing in there trading and I'm like, along with being in Kennecott and other places, but I'm like, what is this gold thing? Why are people buying this gold so much? And so I started researching it, and in 1913, the year the Federal Reserve was created, the dollar was worth $1 and gold was $20.67. And in 1979, 1980 terms, that dollar was only worth about 25 cents. So it had depreciated substantially, but gold went from $20.67 to, call it $600, $700, $800 as it went up. So it went up by 40 times while the dollar depreciated by roughly 75%.
Okay.
So as I started to understand that dynamic, and you can see that gold has maintained its purchasing power for thousands of years, I said, I got to buy some gold. And so that was my foundation of thinking we need to own gold. So I've been a gold buyer all along, and that kind of led me into a current love of mine, that's collecting minerals and gold. And so I'm going to share one more screen with you if somebody's interested in gold for whatever reason. Sure. If you were to Google my name and Google, you'll see, I think the third or fourth thing you'll see is the most beautiful pure gold nugget you'll ever see. And it's a YouTube video literally from February 23rd of this year, only a month ago.
Next to the
And you'll see
Dragon's Lair gold.
the Dragon's Lair gold. Okay.
So in that video, you'll see two gold nuggets that I own. One is 748 troy ounces, which is 51.3 pounds, and one is 921 troy ounces, which is 63 pounds. So it's the world's second and fifth largest gold nugget. And so that's something that has really caught my attention and give me something to do that I like in my old 67-year-old age.
Oh my gosh, that's so unique. I love that you're doing that. And so was it, you were talking about minerals. I mean, are you also investing? Maybe you have a new hedge fund where you're investing in rare metals or rare elements. That seems to be a theme lately.
Actually, no, it's not. Let me see if I can find something here. Okay, let me share a screen again. And let me find this. Okay, share. These are minerals.
Oh, I see. Okay.
Okay, so it's like an aquamarine, and that's a tourmaline, that's a silver, and those kind of beautiful rare things that I first saw at the Smithsonian Museum.
Got it.
And it caught my attention. So that's an asset class. Like baseball cards or coins or stamps or whatever. This is an incredible asset class. Most people don't know about it, but it is.
I didn't know that.
Yes.
And so you are having these minerals certified, assayed. You have them stored somewhere safely with custody, or is this just your own personal way of building a diversified portfolio?
So a good question. So those two golds that I showed you, those are in the Perot Museum here in Dallas, Texas.
Mm-hmm.
If any of your viewers wind up being in Dallas and want to go to the Perot Museum, I'll be happy to take you in there and bring you up close and personal. The minerals I keep in a very safe place, and there are mineral dealers around the world. And like any collectible, if you're going to collect anything, again, stamps, baseball cards, whatever, the key to a successful collection is to sell 10 lesser things to buy one better thing. Mm-hmm. People tend to buy a lot of lesser things because they're beautiful, and they are beautiful, and there's nothing wrong with that collection methodology. But the appreciation in any collectible is at the top end of the spectrum. So that's what I do, is I try and collect the top 10 of a species of a mineral, because that's where all the appreciation is. And several minerals are selling for 7 figures these days.
Oh, that's amazing. So are you at the point of the mineral collection where people are coming to you with new samples that they have
Yes.
found, looking for you to maybe sell 9 more to buy this one? Or are you still out kind of beating the pavement looking for unique minerals that maybe people don't want to let go of because of their rarity, but maybe you can somehow convince them financially?
Yeah, it's all the above.
Okay.
There are people, dealers and collectors come to me with specimens, and they kind of know my collection because I've had them over, and they say, here's one that's better than what you have. Then I always try the upgrade if you can, which is how you should approach any collectible.
I wish I'd have learned that lesson years ago. Are your sons involved with the mineral?
No, but my daughter is. The world's
I was
largest.
going to ask about her. What is she doing with you?
Yeah, she went to Wake Forest. My 2 boys went to SMU. I'm on the board at SMU. And I guess I'm throwing that in there. Southern Methodist University is here in Dallas, SMU as it's affectionately called.
Mhm.
10 years ago, I donated the Kitt Investing and Trading Center at SMU. And I've been talking to classes there for 22 years, and I'll be talking to a class a week from tonight. And so I love talking to young people to help them figure out how to get from where they are to, someplace in a good spot later in life. My two boys went there. They work with me at the Pinnacle Fund. And my daughter went to Wake Forest, or Brand X, as we affectionately call it in the family.
Uh-huh.
And she works for the world's largest mineral dealer, who happens to be here in the Dallas area.
What an amazing story.
Another interesting side note, when I had the Pinnacle China Fund, I told my kids, I said, if you take finance and learn Mandarin, you're done. So my two oldest kids, my oldest son and my daughter, lived in China for 4.5 and 3.5 years. They're both fluent in Mandarin, and they worked in China. And of course, then we found out that investing in China is a very difficult thing to do. Fortunately, I closed my China fund in 2010. And it was not long after that, and even during the time I was there, that there was a lot of frauds uncovered. So I got in early in 2003 investing in China, and got out in 2010, which was just escape. My China fund had a 27.58% average annual net return, but thank goodness I got out when I did.
Sure. Sometimes it's not the return on the capital, but the return of the capital.
Yes, thank goodness. Yeah.
And so then, Barry, did you say you were 67 years old? I mean,
Yes.
Tell me about, what do you, all right, we're longevity is long, is really greatly extended because of what we're doing. I mean, you seem healthy, you seem happy, you have a purpose in life, right? So you're probably going to live into your mid 90s, right? That
Hope
seems
so.
to be the number. So tell me, like, what's going to be in store for you for the next 25 years?
Yeah, so the Pinnacle Fund will go on after I decide to finally leave these two boys alone, along with the other people here. But I'll keep my finger in it as long as I can, as long as I feel like I want to. I'd like to do a lot more traveling, as everybody in the world would like to at our age and younger, which we've been precluded from doing for a while. I want to continue my involvement on the board at SMU and talking to classes there. Want to continue with the mineral collection and that kind of thing. And we spend half the year in Lake Tahoe, Incline Village, which is on the north side of the lake. And we love being out there. It's a magical place. And we just feel super blessed and fortunate. It's been a long, crazy road, as we all have in our lives. And
Yeah, for sure. The crooked road, for sure.
Yeah.
Well, this is great. Well, I know for sure I'm gonna hit you up when my wife and I visit Dallas in the very near future. We're gonna visit some friends probably in the summertime, late spring, early summer. Weddings and things like that.
Sure.
Would love to come by and see the museum and visit you, grab a cup of coffee, or maybe grab a quick tour. This has really been a delightful conversation, Barry. Is there anything else you want to share with us, before we wrap this up, or? I always give people opportunity to shamelessly self-promote a non-for-profit, a business, a book, a restaurant, whatever you want, just to, open our eyes to things that are important to you.
It's funny that you say book, because I will share a book. As I mentioned at the beginning, my mom died when I was 10. My dad lived 2,000 miles away. I was raised by an aunt and uncle, and I was somewhat of a troubled young person for all those reasons. And my aunt, who was raising me, when I was 13 or 14, she said, I think you need to read this book. And the book, see if I can do it at an angle here so it can be seen on my crazy background.
How to win friends and
How to win friends and
people.
influence people. Yeah. And so this book is a magical book. And I'm going to, for those viewers who haven't read it, it was written in 1935 by Dale Carnegie. And it sold many, many tens of millions of copies. And I'm going to give you a few of the chapter titles, because when you hear the chapter titles, you'll say, this is something I would like to understand what the answer is.
Mhm.
And I've given it to, thousands of young kids over the years. So here's a few chapters. I'll read you 7 chapter titles. Number 1, the big secret to dealing with people. Number 2, a simple way to make a good first impression. Number 3, how to make people like you instantly. Sorry if I failed that today, by the way. Number 4,
Great.
an easy way to become a good conversationalist. Number 5, how to criticize and not be hated for it. which was critical for me being a hedge fund manager, talking to CEOs and CFOs and telling them that conference call wasn't good, your PowerPoint presentation is terrible, or your press release didn't say what it should have said. You have to be able to have those kind of conversations and have them take it constructively and not hate you for criticizing what they just did. Next, two more chapter titles: What Everyone Wants, and the last one, Do This and You'll Be Welcome Anywhere. I think if you hear those chapter titles, you'll find it interesting. I gave this book to my 3 kids and they all loved it. And like I said, I've given it to so many people over the years who've just said, thank you so much, because that book, I would say that book has made me successful to whatever extent I've been successful, both personally and professionally.
Thank you for sharing that. I know my dad bought that book for me when I was in high school. I don't think I have the original copy anywhere. I don't even know the last time. This is probably the last time I read it. So it might be time to brush up on a few of those topics, especially on the criticism side. I find myself sometimes being a little bit less than charitable when offering a contrary opinion on the work or effort someone's done. So that would be something I can work on in 2022.
Well, it really is worth it. You'll find a lot of good stuff in there. And if you have young people in your life, whether it's grandchildren or whatever, it's a good thing to give them. It's a lot of great messages in there.
Well, Barry, I really appreciate your time and the leap of faith you had to take to be interviewed today, because again, we don't know each other from the trading floor. You were very open in sharing the YouTube videos, and I've posted that link from the WLS documentary from 1987 a few places, and it always is met with great excitement of the days gone by when we were, our word was our bond. We were in the trading pit. We were, trading and making a living and kind of figuring it out along the way, and what was a relatively new idea.
It's funny, people after those days, people watch Trading Places and watch the orange juice pit, the famous trading, and people are like, is that real? Is that really what it was like? And then you see that documentary I just showed the piece from you mentioned, and that was it. That was a day in the pit. It wasn't always like that, but it was like that pretty, enough to make it realistic as to what it was like.
And I have to share that video with my children because my own kids don't really know what I did for a living. I took my kids down with me on Expiration Saturday, wake up early, hop in the car, go downtown. We would get breakfast at Lou Mitchell's and then run down to the CBOE about 7:45, check up, all our out trades before expirations, before they expired on Saturday. And they were in the trading pit punching cards and calling each other on the phone, and we had a great time. But for the most part, my kids just think that I sat behind a desk and drank Diet Coke and had bagels and, free lunch most of my life. So they didn't see me competing every day. They didn't see me spitting and fighting and doing that 6 hours a day. So it's a great video to be able to share with my own kids, because
it was a crazy time. And those out trades you have occasionally, you'd have these stocks that would make these big moves. And you'd be like, oh God, I hope all my trades went through.
Yeah, exactly. But luckily I only had maybe 1 or 2 bad out trades. The rest of them were very low cost. They were not deal breakers. It was just part of doing business. But 1 or 2 big ones, 5-figure ones that really hurt.
I was lucky too. You always have, occasionally you'd have some, but they weren't bad ones. PJ Forney, as I mentioned, he would go down there on Saturday mornings after expiration with his daughters, and he'd go through his out trades. He'd trade, monstrous volume during the day. And so it was always a bit scary, he'd tell me, but he always got through it.
Well, please, when you talk to Kevin Werner, one of my favorite guys from Shack-In, from the trading floor, and also PJ, give him my contact information, have him reach out to me, because he's got a great story. I mean, he really does. I would love to be able to have a conversation with him.
I will talk to him after we hang up and tell him, give me your contact information. And Scott Connor, still in Chicago, doing a great job for Thinkorswim.
Well, thank you for bringing just wonderful people from California over to Chicago. I appreciate it, Barry. And again, it was great catching up with you. I hope to see you during the summer.
You too. Thanks for taking the effort to get in touch with me.
You're welcome.